Broadcasting from the studios of Business RadioX, it's time for Advisory Insights, brought to you by Oberman Law Firm, serving clients nationwide with tailored service and exceptional results. Now, here's your host.
Welcome, everyone, to Advisory Insights. This is Stuart Oberman, Oberman Law Firm. Well, we have a fantastic guest with us today on our podcast, Danielle McBride, who is a partner at Oberman Law Firm and who does an enormous amount of healthcare transactions on a national basis. For those who are not familiar with our firm, we are very, very healthcare centered. Last year, we did 135 transactions, and I believe the number was maybe about 350 million was our total of the transactions. So through this craze that we're in mergers and acquisitions, the tax consequences are so underviewed that they got to get out in the forefront of these issues. And Danielle McBride, who does a fabulous job with the firm, and who is our resident tax guru, if you will, and has a master's in tax, is really going to walk us through some things. And I got some questions along the way that she'll answer, hopefully. And this is such an ongoing topic. We can talk about, tax consequences for a day and not even cover everything on a merger and acquisition. So Danielle, welcome to the show again.
Thanks, Stuart. Good to be here, and happy to put some information out there so our buyers and sellers can be a little more educated.
Yeah, it's
on
amazing.
These topics.
It is amazing how many questions you receive and we all receive on these deals, and how uninformed some advisors are. And I want you to touch on that later on or during the podcast. But I want to talk about some of the things you run into on these sales from a tax side. You've got goodwill. You've got you explain, you got personal versus corporate. You got, C versus S corporations. You've got reporting issues. I know this is a long conversation that we can have on this. And I know you'll drill it down to the basics, which will not cover all the details. So tell us,
Sure.
I want to know what you're running into on some of these sales.
Sure. So, basic tax consequences, I think a lot of that information is out there. You've got a sale of tangible assets, a sale of goodwill, capital gain on goodwill, tax treatment is ordinary income on the sale of tangible assets. But it gets much more complicated, and there can be a lot more detail involved depending on the type of entity that someone has. So if your seller is, say, a C corporation versus an S corporation or an LLC, a C corporation has an entity level tax. It's not a pass-through entity, which means that there is a tax on the sale of any assets from the corporation first, and then you've got your shareholders receiving distributions of the balance of that. And so there's a double taxation issue on the goodwill. Could be a goodwill double taxation issue if your corporation owns the goodwill and sells it. So that's where personal goodwill is kind of a key component and most important in these C corporation sales. And we still have a lot of older C corporations that are out there in the healthcare world. So you want to make sure that you're looking at that. Not only C corporations, but S corporations. If a C corporation elected S corporation status, they have a 5-year window during which they still get treated if they sell assets like they're a C corporation. They call it a built-in gains tax. So you've got to be aware if you're a C corporation or a C that elected S status and you haven't met your 5-year built-in gains tax window, personal goodwill in those cases is just key because you're going to avoid a double taxation issue if you set up the transaction properly using personal goodwill instead of having the corporation own and sell all of the assets.
That's a good point.
So it could be a huge tax difference here. So that's something you got to talk to your advisors about. Make sure that it's being structured properly. Make sure your contracts have those things specifically listed in it, and the sellers are listed as both a personal seller selling personal goodwill and corporations selling the assets. And then that even goes down to payments as well. Make sure if you're getting personal goodwill and it's a key component in this C corporation, or what we call sort of a non-ripe S corporation, the payment and all the documentation needs to track in order to protect that personal goodwill concept and keep you from paying twice on the goodwill.
A non-right election corporation?
Non-ripe.
Ripe.
Right.
Okay.
We call it a non-ripe S election when you've elected S corporation status and you have that 5-year built-in gains tax window that you have to meet.
Okay. You just mentioned a couple things. Do you run into cases where the CPAs, one, don't understand transactions, or two, they don't get involved early enough?
Yeah, absolutely. And the latter is the most what I see most often. The clients are hesitant to get their accountants involved early in the transaction. And I think that's one of the biggest mistakes that I see made, is not involving that CPA. And there are lots of good CPAs out there that understand and work in these dental transactions. They just need to be brought into they need looped in. And they need to help talk about personal versus corporate goodwill. If there are, tax attributes that the corporation could use, some things allocated to corporate goodwill versus personal goodwill, because they've got, things to, corporate tax attributes to use up. I mean, the CPA is in a position to know these things. They're also the first line of defense if a transaction gets audited. So they need to be involved from the beginning, and everybody needs to be on the same page. So I always say, practice transitions, practice sales, business sales. They're a team sport, and you need to have all your team players on the field when you're trying to work through these things.
I don't know. Some transactions are a blood sport. I don't know about a team sport.
Yeah. That's when we get the corporate transactions involved, and it gets more complicated.
And I know you run into this. When everyone is ready to quit the deal, right? I mean, everyone's like, I'm done with this. I can't do this anymore. I'm sick of this. I'm done. We're about one day away from finalizing the deal, aren't we? It just gets to that stage. Now, you also mentioned a couple of things. You mentioned, at the end of the transaction, there's got to be a true up of allocations that have to be reported to the IRS. How important is that, and what form is that?
That is very important, and it's often overlooked, and most clients don't understand this and don't know anything about it as well. It's a Form 8594. So in a sale transaction, you have to report the transaction to the IRS. That gets done on a Form 8594. That should be prepared by the accountants. Another reason accountants need looped into this, because they're the ones that ultimately prepare that Form 8594 to submit to the IRS. So in the documents, it's important to have the price allocation spelled out so that the accountants can properly report this, because it's the same as, if you accidentally forget to report that you got a 1099 or a W-2 from an employer, you're going to wind up audited, because the IRS gets reporting from both sides of a transaction. So if you don't submit an 8594, or you submit one that's different than the other party, it's going to flag you for an audit.
Now I got one question that we've run into on occasion. What happens if the buyer wants to set a floating sales price that is spread out through the years, where, let's say they say, if you hit this target, this is a sale price, and that may go on for 2 or 3 years. How complex is that, and how problematic is that for the seller who doesn't know what in the world to do with his taxes?
Yeah, and that is also a reason to have your accountant involved, because there are certain ways that you can report that. And, that may get reported as an installment sale. And those numbers, you don't want to report it on that initial tax form that goes in, because you may or may not receive those amounts. those amounts could be treated as an installment sale and you don't get taxed until you actually receive the funds.
Oh, wow. Okay. So that sounds like another podcast. So it's, I mean, it truly is amazing. In this brief segment that you've touched on corporate goodwill, personal versus corporate, C versus S corporation, reporting, 850-94, and you've touched on installment sales. I mean, it is truly amazing on what has to be done on a tax side from a sale, whether it is a small sale or a $44 million sale, which we've handled on a transaction. So I like to say this, we could talk 7 days on these topics, but in closing, is there anything you'd want to add, advice that we can give, our listeners on what they want to do before they start getting into the meat of this transaction or a transaction?
Well, make sure you reach out to your advisors. If you've got letters of intent, make sure you show those to your advisors and go through those. Make sure you're thinking about the structure and the tax allocations, and make sure you understand the terms of the deal. Things like personal versus corporate goodwill. Another thing we didn't even touch on that I see as a big issue is accounts receivable and how that's going to be handled.
Here's another podcast. You're making a career out of this.
Yeah. You're going to keep me in business.
We're going to have the Danielle McBride show in here in a minute. They're going to give me the hook. You've already teed up seven episodes here. It's like a version of Game of Thrones. Jeez. But yeah. Well, it is amazing, and you've done an amazing job since joining the firm. We're so happy to have you. You bring so much gravitas to the table that, again, it's we're definitely going to have you back on this show. So, in parting, if you need to reach Danielle, please feel free to email her at Danielle, DANIELLE at Obermanlaw.com. Phone number is 770-886-2400. Folks, it's been an absolute pleasure, and we hope that you've at least taken away one, golden nugget of this, and if so, we'll consider this podcast an absolute success. Danielle, thank you again, and I know you got a convention to go to, and we appreciate your time. Thanks a lot. Ladies and gentlemen, thanks, and have a fantastic day.
Thank you for joining us on Advisory Insights. This show is brought to you by Oberman Law Firm, a business-centric law firm representing local, regional, and national clients in a wide range of practice areas, including healthcare, mergers and acquisitions, corporate transactions, and regulatory compliance.